Investment products are not FDIC insured or bank guaranteed and may lose value. Hello, and welcome to Markets in a Minute. I'm Sean Snyder, Head of Investment Strategy for Citi Personal Wealth Management. Today we're going to talk about Donald Trump's unexpected presidential victory and what it means to markets. As we correctly pointed out in November's video titled Keeping Calm in Unusual Times, equity investors who decided to stay invested rather than trying to time the market around the election were rewarded for their patience, with the S&P 500 index rallying 6.2% between the election on November 8th and December 13th. So why have U.S. stocks rallied when most thought that a Trump victory would lead to a market sell-off? The main reason seems to be that investors were not expecting a Republican sweep of both the presidency and Congress. The fact that Trump will now be working with a Republican Congress has substantially raised the odds that he will be able to pass an infrastructure plan, deregulate industry, and implement major tax reform. While policy details are still vague, this may provide a boost to economic growth by either late 2017 or early 2018, depending on how long it takes Congress to legislate. It's this rise in both growth and inflation expectations that are causing investors to shift out of crowded defensive positions like utility stocks and U.S. Treasuries and into more cyclical sectors like financials and industrials, which tend to outperform when the economy is picking up steam. However, we still think that investors should be aware that these great expectations are accompanied by a great deal of uncertainty. While Trump appears to be taking a somewhat more pragmatic approach to governing than he suggested on the campaign trail, there's still a risk that the administration toughens its stance on trade relations, which could cause equity markets to react more negatively. So what does this mean for investors as we head into 2017? Our Global Investment Committee is maintaining its neutral weighting on U.S. stocks for the time being, but we think that there's further upside in 2017. While there's still a lot of uncertainty about what a Trump presidency will ultimately mean, we think that it's important to remember that stocks are also currently reflecting improving economic data and the possibility of a better earnings outlook for 2017. When combined, this could translate into U.S. stocks having further room to run in the upcoming year, but it may not happen in a straight line, and there's some chance that we see bouts of heightened volatility as markets try to digest what the new administration and its policies mean to the economic outlook. If you have any questions about how these trends may affect your portfolio or are seeking other advice about your financial future, please feel free to contact a Citi Personal Wealth Management financial advisor today. I'm Sean Snyder, and thank you for watching Markets in a Minute.